Hey guys, it's Seth and no, it's not Paul. Oh my God, Mo. I almost said that. Listen to me. It's Mo. This is for top tier, the bid and ask. You know, I love you, but I keep that bid and ask tight, baby. And today we're talking about just with Mo, that handsome dreamboat that you love. When to buy, when to sell, when to take profits. If this is new to you and you're new to the bid and ask, we welcome you in and we will show you. I'm confused about this crap too. So we're just going to double down. I like to think we are professional reminders. And so if you've heard this before, let's double down, keep it in our thoughts. When to buy, when to sell, when to take profits. Let's look at the charts. I present to you Mustafa Hussein. Give it to me, baby.
Hey guys. Okay, so first thing I want to talk about is a lot of this is pattern recognition. So we need to get into what patterns we're looking for, and then we'll know when to buy and sell. So you guys often hear me talk about W formation. So this is a W formation. This is a good buy signal. I like to create, you see me also talk about flagpole patterns. So I don't like seeing a stock that goes like this and you just see a line chart go up there and I always draw that flagpole. Because that means there's no support in there that's gonna so this thing can fall right back down on us. What I like seeing are these W's where the stock price will run up, pull back a little bit. So I really like seeing pullbacks because this creates a new support level. The stock price can run up again, and the next time it pulls back, the odds are it's not going to pull back this level. That creates another support level. So these are called higher lows. These are very good buy patterns that we're going to couple with engulfing candlesticks and so forth. So the next thing that we're going to look at are these candlesticks, and I will just redraw them. So an engulfing candlestick is a candlestick that completely fills out the day and is completely filled 100%.
I'm not too clear on these wicks, Mo, so give it to me straight now.
Okay, so what this means is that the stock price started down here during the day and it finished up here. What the wick will indicate is, let's say the stock price starts down here and the stock moves up and it pulls right back down and it starts the day here and it will close the day here. So this indicates that the stock price moved to the top of that wick that day, but it closed all the way down here. You'll often see this if you're running into some kind of support resistance level or a moving average, something like that. So that is not a good signal to buy on. So when I say you want an engulfing candlestick, you want an engulfing candlestick that looks like that, closes the day at the top. This, to me, was a very bad looking signal because what it indicates is that it challenged a support level and it fell right back down and it didn't have it. The next day, because this kind of looks like basically a hammer, like this.
Yes.
This is called a hammer formation. The next day, you could see something that gaps down here and you're gonna open the day a little bit lower. So the idea of buy high, sell higher, a little bit counterintuitive, right? We always hear buy low, sell high. I like buy high, sell higher because I would rather see a candle finish like this. The next day, you get a good signal like that. The stock price is a little bit higher, but I'm buying on that day because the probability of that stock price going up now is a lot stronger because a support level was created. You have more volume coming into the stock.
So I see this
Does that make sense?
Yeah, I see this all too often. I see that we've entered the lower stochastic, the 32%.
Yeah.
I see an engulfing candlestick, but then you say I need at least 2 or 3 to take out those previous days. I seem like I would probably be buying too early,
Correct.
Right?
So a big thing is that people buy too early. Let's get in here and see if we can just focus. So this is a great example. Oh, let me blow it up. This is a really good example of when somebody would buy just a little bit too early. Let's see here. This is perfect right over here. So what we're going to find is that we've entered the sweet spot. We've created that reversal. We're moving up on the long-term stochastic. Now, Seth, you have a couple of days in here where you have these 2 little red candlesticks that what they look like right now are that. So that looks like you have a wick at the top. That means the stock price moved to the top that day, and it moved to the bottom, and it kind of closed in the middle. The next day, I'm going to just blow it up a little bit for you. You have something that looks like this.
Not good enough.
Not good. So those are not areas that you want to add because it's not giving you confidence that there's volume moving into the stock price can hold a certain level. The next day, you do get a little bit more of a candlestick, but there's still a wick at the top. This is not the worst signal to buy on. Just you're more likely than not going to have wicks because the idea that a stock price is always going to close at the high of the day, it's just not realistic. I just don't want you to see it's way up here and then it closes way down here. the best signal right here, you're in the sweet spot, and this
I
one
see
right
it. Yeah, those
you
two. Yes.
You have a very good engulfing
Blow that up a
candlestick.
bit. Yeah. So we have a golfing candlestick followed by another one.
Correct.
But see, there I am. Is we're already well into the sweet spot there, Mo, and that's why I would have fuddled this up.
That's everybody wants to get in basically right there.
Of course.
So what the hard part is, and this is where the subjectivity of trading comes in and the emotion. You do have to control your emotions when you're doing this, because it's not like momentum trading where you just do what the computer tells you. You have to control your emotions here. But let's zoom out here, Seth, and just see what this thing did after that run. Let's see here. I mean, look at this run that Apple took. We were buying right here.
Mm-hmm.
And you thought that you were getting in too late. But look at this run that this thing had. It went from $134 up to $150, basically. You still caught all of that moving up there. And you moved very smoothly through the stochastic. This is a great looking stock. The idea is, the video is about when to buy and when to sell. When to buy, you have to be in the sweet spot. You have to have good engulfing candlesticks. You want to have these W formations that are forming on your candlesticks. It's very important to have those because you want to create those support levels. Now,
how about selling? Yeah.
Yep, when to sell. So actually, Apple's a good example of when to sell because we had to do it recently.
Do we take our wicks into account as well?
You know, you start to see a lot of turbulence, and when you start seeing a lot of what this means, all these wicks, means that there's really not a consensus on stock price because you're opening some days up here, closing some days down here. You had a little bit of a gap right there. You can just tell that this looks different than what I was showing you before with those nice, clean candlesticks. The biggest indicator of when to sell, completely exit your position. This doesn't mean take profits. This means when to sell, is when you drop with your red line below 80% into the sweet spot, and meaning you have a downtrend. That's really it. That is when you need to know how to sell. That's when you need to know to sell a stock. The likelihood of that turning up and going back into that overbought area,
yes,
it's low. And remember, we're playing with probabilities here.
This is a sweet spot reversal. You'd have to come back. And when you say sell, we're talking sell out, baby?
Sell your position. So we took a 7% loss in the Employed Trader Series. We had a nice run up, and then these big days happen where we had those big volatility days. And this is why it's tough to trade long term in today's market, because this is not normal. You don't usually see this, and you don't really see big gaps on Apple and so forth. So that's basically buying and selling. Do you want to go over taking profits? Because I think this is very important.
Yes.
So I'm going to just draw an example of what taking profits is. Let's say you invest $1,000 into a stock. You buy $1,000 worth of shares. The stock price goes up for you, let's say 10%. So you now have $1,100 in your account. And now you're starting to run into, let's say, the 100-day moving average, because that is going to be some sort of resistance point, as we know. I would say to you, take your profits off the table. And what profit taking means is take that, I'm sorry, this was 1,100. Thank you. What this means is take that $100 off the table and go back to your initial investment. So now you're basically playing with house money. You have profits in your pocket, and if the stock price does drop further and you have to exit the position, well, you made money. You didn't give up your $100 plus your additional basis. So right now, I would just sell 10%, so sell $100, and you are back to your $1,000 investment, and you have money in your pocket. You're playing with house money at this point. Worst case scenario, stock price moves up on you, and you lose a couple of cents, couple of dollars, a couple of percentage points. But you go ahead and you add your profit right back on, and you go towards that next buy signal, and you move up in price. So there's a method to the madness. It does sound a little bit confusing, but these buy signals and sell signals and when to buy, when to add, when to take profits are going to save you in the long run over a 20, 30-year period of doing this. You're going to do very well.
Keep up the great work in that bid and ask. You guys are awesome. We appreciate your support and supporting yourselves. It's great to see the group growing.
Awesome.
And we're giving away a Tesla this fall. Hopefully it's one of you. Start choosing your color. And once we give it away, you'll get the car in like 3 to 5 years.
Yep, exactly.
Really great. Beautiful. All right, thanks for watching, guys. Fondle that thumb. Well, you don't need to, right? No, Tim, they don't need to fondle the thumbs up. I mean, just fondle my heart and Mo's too. See you guys. Thanks.